the introduction, and thanks for the invitation to be here and speak a little bit about who I am, what I do, but mostly share my very own experience on fundraising. So that is what I would like to do. I try not to speak for full 20 minutes so that we have perhaps some time for question and answers to dive deeper into kind of the real life situations that you find yourselves in being a founder in a fundraising situation. So my background, you touched upon it. I started my career as an investment banker at Credit Suisse, based in Frankfurt and London. But after 2 years there as a junior, I decided to leave. And the main reason was, banking is organized like a very strict hierarchy. And when I was looking at my peers, but also when I was looking at my senior bankers that I worked for, I was missing a clear role model because I realized that at the company, at least I was in, it was not the best and smartest people to grow up, but it was the ones that stayed the longest because the smarter talent would drop out and do something else, whether it be in the financial sector or in the startup world or whatnot. I was missing that role model and I just couldn't picture myself in those shoes within 10 years' time. So the day I quit, I received 4 phone calls from friends doing whatever in Berlin. And I jumped on a train, I came here, and since then I stayed. And since then I was involved with 4 startups. I became the COO of Casacanda, which was a very, very early stage flash sales website for home and living. So kind of similar to what West Wing is still doing today, just a little bit of a different brand positioning. I became the COO there. I had no idea what was expected. I've never seen a warehouse in my entire life. I hardly knew how to pronounce logistics, but no one else at the company knew what to expect from me. So it was just like, you're going to figure it out. Half a year into the business, I was employee 3 or 4. We were acquired by Fab.com. Fab at that point in time was a New York-based company. Back then, the fastest growing consumer-oriented company in the world. We became the management team for Fab Europe, kind of running the show here in Berlin. We integrated another team that was acquired in London, scaled up the team here from 20 to about 300, back to 0 in 2.5 years. So it was a big roller coaster ride. We made every mistake in the book, not only us, but I think also the founders in the US. But it was, with hindsight, a fantastic journey because the learnings are pretty much priceless that I took from there. That was also the time where I met one of my 2 co-founders, Lea, who was running merchandising at Fab, later on strategy and analytics. I was running logistics, and we were part of the management team and knew that there would not be a future for Fab in Europe. So we teamed up and thought about what we could do next. And we decided to go into the art space and decided to found the company that we're still running, JUNIQE, which is Europe's #1 marketplace for accessible and affordable art. So what we found a few years ago was that when you would look for art, you could either go for the IKEA commodity mainstream, very uninspired, but the only place that is actually really accessible to find stuff that is affordable. Or you really have to pay 1,000 euros or more, which is kind of the entry range of the collector's market. But the vast majority in between, so people looking for a lifestyle product, something more inspirational than the London Tower Bridge replica at the same price point, was largely untapped. And that was the kind of demand side. At the same time, because of our background at Fab, we knew that on the supply side, there are tons of creative people out there. There are tons of creators who are longing for a distribution platform that was not out there because either there were communities that were lacking any monetization channel, or there were open marketplaces such as Etsy or Davanda, where every single artist or creator would have to do shipping, fulfillment, procurement, and all the things, honestly, they don't really want to do, and they could also never scale on their own. So we take away all the pain from them and back up our platform through a network of on-demand printing partners all across Europe that take over the on-demand printing, fulfillment, and shipping on our behalf, and we pay the artist a revenue share on every item sold. So it's not only riskless, but it's also effortless for the artists to make a constant stream of income if they become successful on our platform without any further hassle. And we actually allow a few of the people we work with, certainly not everyone yet, but we work in total with 700 artists, and the most successful ones really do make a living with what they want to do, and that is being creators of art, and they have managed to quit their day-to-day jobs, being an illustrator for a newspaper or photographer or whatnot, because they can now just make a living with what they really want to do. At the same time, I'm on the board of a fintech company, Zavedo, but yeah, I would say 99.9% of my time I run JUNIQE. And I do run fundraising at JUNIQE. So we raised in total around 20 million euros in venture capital over 4 rounds over the last 3 years. We founded the company in October 2013 and went live in January 2014. And before I came here, I thought about, okay, what's my own experience? What are kind of the learnings? Because even though I have been working in the startup world, I was never involved in fundraising. Yeah, I was part of the management team, but I've never spoken to an investor before that, basically. Yeah, so there are a few things I just would like to share, which is my very own experience. It may sound very obvious, but I think first and foremost, the very most important thing is that raising money is a relationship business, 100%. Raising money is about trust, is about getting to know people in an audience such as today, either personally or through introductions via people that you know, that may be, you know, just a common denominator and source for introduction. If you send your pitch deck to information@vc.com, it will most likely not work. So really take the time. I mean, every founder, early stage founder who's here today, good choice, because I think that's really the way to meet people and get in touch on a personal level. If you have an early stage idea, what should an investor believe in? What should they invest? What should they look for? Yes, do they believe in the idea? Yes or no, but also do they believe in you as a person? And I think that's what you have to bring across. You have to somehow cut through the noise and be on the list of investors in comparison to, let's say, a successful investor with a proper deal flow would probably see a few hundred, if not a few thousand deals a year, and may only invest in a handful. Cutting through the noise, kind of overcoming that first barrier and make them take a second, deeper look. Doesn't mean they're going to invest, but make them take a second look is, I think, the first step that is really about personal connection and getting to know each other. At the same time, I learned by heart that you have to be persistent. And I'm going to give you a story about our very first round, which was a angel and family and friends round. So we founded the entity in October 2013. We put some own money into the company to start development, hire the first developers, and build the platform. And at that point in time, we already signed 6 people to work for us 3 months later to start in January. But we didn't have cash yet. So the people we signed to work for us were former colleagues from Fab who we trusted, who we knew, who were on the market because Fab was closing the offices in Berlin. So that was actually a big advantage that we could start off with a team, because at the same time, when you don't have a product, also hiring talent is a challenge. But it turned out they were supposed to start January 2nd, and fundraising was harder than expected for us. I closed the first 100,000 euros at around 6 p.m. on December 31st, before I left for New Year's dinner. And we had people to start working on January 2nd, and we didn't have cash to pay them prior to that very day. That was the first 100K we closed, and it was really a matter of 1 or 2 days, perhaps otherwise we wouldn't be here today. At the end of the day, based on the first 100K, we raised 325K. And closed the round then end of January, a few weeks later, and had sufficient time to have a runway of around 6 months, show traction towards the next round. But it was close, and we ran into a lot of situation, into a lot of no's, too early, we don't do consumer, I don't know, I don't have capacity, we're looking into other situations right now, whatever it is, right? But we did not give up, and I think that's also one main message. At the end of the day, there is a funnel. I think I've never spoken to a founder who found kind of, money within the first pitch, but it takes time, it takes persistency, and you cannot really plan that before you meet the people, and just have to continue doing what you do. At the same time also, I touched upon that, I learned that raising money more often than not takes time, and it takes more time than we anticipated at the very beginning, especially in the first rounds. We thought, hey, we have the experience, we have a great idea, we have a great team, so we will get funded. I mean, it's pretty clear actually, right? But there are a lot of great teams, there are a lot of ideas out there, and there's, again, just for an investor, it's a hard time to digest, and you have to bring more to the table to stand out, and that sometimes just takes time. Our first round took about 3 months to close. I would say more or less the seed round the same time. The A round took 6 months, and we just closed a 14 million B round in summer last year. And from the point of first contact, kind of getting to know the person who later on led the round to money in the bank was 9 months. And if that's your time horizon, it wasn't 9 months of full-time work, but if you only have 4 months of cash in the bank, you have a problem. So you have to plan for that, and you have to account for the fact that it just does take time, not only speaking to people, not only getting the term sheet in place, but having the money in the bank. That's what matters at the end of the day, right? It's having the money in the bank. And I think only then the period of raising, at least for that very particular round, is over. Because it takes so long, and I mean 9 months, we as a company are 3 years old. 9 months is a long time, 9 out of 3 years. Yeah? So once you close a round, there's a next round that probably will come. So it's something that we call kind of ABR, always be raising. Yeah? Even though you don't raise for a round tomorrow, you need to constantly look for capital. You need to be open for opportunities that may arise. If you find, I don't know, for whatever reason, even though you're not fundraising, you meet your preferred investor, it's whatever, for whatever reason, smart money or whatnot, be open to these kind of things, be flexible in terms of your fundraising plan. But besides that, just continue to meet people. Yeah? If you get a no in a seed round or whatnot, oftentimes investors would They would oftentimes tell you, let's keep in touch, keep me in the loop, perhaps next year I'd like to observe how the business is going. Of course, I mean, it's a hard decision to make. I mean, if I were in the shoes, I'm not an investor now, but that's how I understand the decision process. It's a hard decision to make because it's a very binary decision, right? But at the same time, you also don't want to miss out. If you miss out on a round, but this develops into the next Facebook over the next year time, you want to stay in touch. So oftentimes there is a clear not now, but let's stay in touch, rather than a no, not for us. So keep in touch with those people and continue to build the relationship, because they may become relevant in a few years' time. And it's always very hard to approach an investor, I learned, when you need money in the bank tomorrow. It's not possible. Ideally, when you need money, or when you start a structured fundraising process, ideally you have a short list of people that you already know. You know why to approach them, and they know your business. So the pitch about what do we do and why is that nice is no longer the one that you have to bring across. And that makes life a lot easier for both sides, actually, because you have to be cautious of your own time as a founder when raising funds, but at the same time it makes you more relevant at this very stage, because you don't have to do that first step of education anymore. So again, I can only encourage also you guys to speak to perhaps investors, or just get to know people, exchange ideas, get on their radar of later stage guys that may be relevant just in a year or two from now. Don't be too narrow in your focus, but at the same time also understand their positioning. Don't try to raise money from them now, but just try to get on their radar. Because, they will tell you otherwise, but it's also a waste of time. Another thing I learned is kind of about the process. I think as a founder, raising money and having a term sheet in place, fantastic, but you have to remain in the driver's seat. And usually, I mean, I run fundraising for the first time, but I've learned so much over the last 4 rounds. Be in the driver's seat, drive the process, and understand the terms. Speaking to an investor, you speak to people who do understand the terms because it's their job. You as a founder, your main priority always is running a successful business and building the business. That's very clear. But at the same time, there are a few terms besides valuation and vesting or whatnot when it comes to compliance, corporate governance that determine as a team how you run your business. Because as soon as you take capital in, especially institutional capital, you will not run the business completely independently on your own anymore. There are people that have a say in certain things for the good, hopefully. But I think you as a founder, they invest in you as a team. Get advisors on board, not only legal people, but also speak to other founders who have been in the situation already to make sure you understand how to interpret the terms, not only from a legal perspective, by the way, but is that a realistic case? In what situation could that be important? I think it is important to understand and learn that because you can, and we did that as well in the very first rounds, you can make a few mistakes without knowing. But the people that have done that a few times would be able to tell you, which doesn't mean that it's a free lunch and you can negotiate everything successfully, but you can still ask for it and try and pick your fights and really ask for what is really important for you, because at the end of the day, people invest in you as a team. There's always in early stage a little bit of a mismatch because you're more reliant on capital, you're more reliant on the investor than vice versa, but at the same time you can be courageous enough to bring up the aspects and the points that are important for you. And lastly, I think if you have options, also do your DD on the investor. I mean, today is quite an interesting format because investors stand here and present, right? Do your DD on them. I mean, they do your DD on you and they decide, do I want to work with this guy for the next 5 to 10 years, yes or no? They decide, is that a great idea? Can I make a financial return? But they also decide whether or not they want to work with you. You'll go through a journey for at least a few years and you'll go through good times and you'll go through bad times, for sure. And you need to be sure you want to do that together. And luckily at JUNIQE, besides the first round that was really hard, we did have options. For instance, the seed round we had a term sheet in place. Not the lead investor, but one of the co-investors dropped out. We needed to find a replacement after the term sheet was already negotiated. Had to turn this around. That's actually also one of the situations that my girlfriend still hates me for, because we were in a fundraising process and we booked holidays to go to Australia. Then our co-investor dropped out and we decided the night before flying to cancel the vacation. I needed time to close the round. It was just the one important thing in my life to do. We closed the round and ended up flying to Turkey, which was super boring for a week over summer. But luckily, I mean, Michael led the round back then. Luckily, this went out well, and we're still here. But these are the kind of situations you cannot plan, and you have to be flexible. You have to be open. And I think this story again touches upon a lot of the learnings that I shared. Yeah, persistency, building up the network. If we would have gone for one solution only, if we would have not spoken to other people at the same time, we would have been fucked. And I think having that flexibility, knowing especially when there is interest from more than one party, it just makes sense to continue to speak to people, again, until money's in the bank, because anything can happen, even after you signed a term sheet or even in situations of negotiation. And that said, I have no idea around timing because the clock is not working, but I hope it's not 20 minutes. So we'd have time for a few questions, whatever it is. Not sure if I can answer, but I will try.